And now today's featured speakers are Professor David Missirian, Paul Reed, class of 2003, and Shant Banosian, class of 2002. Professor Missirian teaches in the Law, Taxation, and Financial Planning Department at Bentley and is also a state-certified instructor for the Massachusetts Real Estate Licensing Board. In addition to his more than 30 years of teaching at Bentley, he has owned his own law firm for 38 years, specializing in real estate law and representing buyers, sellers, and lenders. Professor Missirian earned his Juris Doctorate degree at the University of Tulsa Law School. We're delighted to welcome him back as a repeat faculty speaker for the Office of Alumni and Family Engagement.
Thank you.
Paul Reed, class of 2003, is a licensed realtor who is passionate about real estate and working with both buyers and sellers. He has over a decade of professional experience as an account manager, business consultant, and realtor in Massachusetts. Paul works with clients all over the greater Boston area. Shant Banosian, class of 2002, is Guaranteed Rate's #1 loan officer nationwide 5 years running with 1,907 closed units and $915 million in funded loans in 2019 alone. He has been in the mortgage business for more than a decade and has consistently been recognized for his high level of production and superior customer service. With an impressive career volume of over $3 billion in funded loans, Shant prides himself on being one of the best in the business. He's also heavily involved with St. Jude's Children's Research Hospital Walk Run in Boston. So without further ado, please join me in virtually welcoming our panel of guests this afternoon. Thank you.
Thank you. It's wonderful to have you all here with us today. I'm Professor David Missirian. What we're going to try to do here is guide you through the home purchase process. What you need to understand is that the journey or process from finding a home to financing the home to doing the varying paperwork that's necessary to purchase that home involves different people with different skill sets, which is why we have Paul and Shant here and myself, because each of us handle a different portion of that process. Sometimes we are doing it alone. Other times, Paul and myself, our areas overlap, as well as Shant and Paul and myself. So what we're going to try to do is guide you through that process so that you can understand in a very broad general way how this all works. In answer to the question, is this the time to buy a home? I was taught as a very young boy from my grandfather that you can't lose with real estate. It's a limited supply, and you got to live somewhere. So in this instance, interest rates are very low. It's a wonderful time to buy. I think you're going to find that from most people. The thing that's important is to buy something that you like, because everybody's tastes are slightly different. Make sure that it's something that you like, you're going to be happy with. And remember that it's going to be yours and it's going to be great. And a good team of people that take care of you is important. The other issue is each one of these people, Paul, Shant, myself, we're professionals. This is what we do for a living. And your mother, your father are great resources always. So too is your hairdresser if you're getting a haircut, but they are not the people to be talking to unless this is what they do for work. So what I'm going to do right now is I'm going to turn it over to Shant for a minute, because sometimes people go to Paul first, sometimes they go to Shant first, but in this instance, I'm going to turn it over to Shant. Shant, why don't you tell them, how this process might start?
Absolutely. So, I want to talk about what goes into a pre-approval and why it's so important. That's generally where I'm able to help first-time home buyers, whether you're a first-time home buyer or any home buyer for that matter. But we can help people buying a primary residence, second home, or investment properties. I think it's important to know what's going on in the marketplace right now. We're seeing in our world mortgage rates at all-time lowest levels ever. We're seeing rates that I never thought we'd see. And so why that's great is that helps first-time home buyers much more than ever before. It makes, in Boston, unfortunately, rent's very expensive. So a lot of times buying a home, it will help. With the home, you have forced savings in terms of with every payment you're making, you're paying principal balances down of your mortgage. Your tax deductible mortgage interest. So for all you Bentley accountants out there, you know how good that is. And then, you know, you've got a home that's over the course of time appreciating. So the average net worth of a renter versus a homeowner over the course of time is a huge disparity there in terms of homeowners who have greater wealth and net worth. So, so rates are helping promote homeownership. We're seeing massive activity in the market right now. In fact, I think due to you know, interest rates going down, you know, obviously buying power increases. You can buy more house at a lower cost. It also improves affordability, especially in an expensive market like we're in here in the Boston area, but you know, all around the country is expensive as well. Purchase mortgage applications are at an 11-year high. You know, home ownership is at a 67% clip right now. So it's the greatest in 12 years that more Americans own houses than in the last 12 years. And what we're seeing in Massachusetts specifically, Massachusetts is leading the country in bidding wars. 67% of all homes in the market the last 3 months on average in Massachusetts are in some form of multiple offer situation. It's because inventory is way down, and I think because of the coronavirus pandemic, I think owning a home is much more important than ever. I think, you know, the safety and security and the functionality of a house is really amplified post coronavirus, or in this world that we're in. So I think it's really important to get prepared. So when we work with a client that's getting pre-approved, you know, it's important to understand, you know, what the process is going to look like and why it's important. Ultimately, what a pre-approval does, it's actually more important than ever because, you know, I'd say 6 months ago, you needed a pre-approval to make an offer. Okay, almost across the board now, post coronavirus, you need a pre-approval just to get into a house, and that's a new thing because you know, whether it's an open house or whether it's a private showing. A lot of times they're just asking to make sure you're pre-approved. So getting that pre-approved nice and early if you're going to buy a house in the future is important. You know, it just, what a pre-approval application is a full-out mortgage application. So a loan officer is going to review your credit, your income, and your assets. So those are the three major qualifying factors when buying a house that we're going to talk to you about. You know, once we verify your credit, income, and assets, your qualifying factors, we're going to talk to you about, you know, the programs you qualify for. You know, we're going to talk to you about what your goals are, what your financial needs are. You know, we're going to help you select the best loan product. There's a million different loan products out there, and lots of different banks have different varieties in terms of, you're going to hear things like Fannie Mae, Freddie Mac, Mass Housing, FHA, VA, UFCA, all these different acronyms, right? Jumbo loans. And we're going to help you figure out, based on what your goals and needs are, as to what product is the best fit for you based on your monthly payments, your down payment ability, those type of things. And then we're going to run it through some form of underwriting, whether it's an actual manual underwrite with an underwriter in person, desktop underwrite, but we're going to make sure that it's not just our opinion that your loan works, but it's gone through all the guidelines for credit income asset standpoint. We can make sure that you're out there shopping for a home, you're actually going to get a loan approval. You know, why a pre-approval important is to a seller, to a listing agent, to a buyer's agent, to you. It specifically says that the mortgage company's reviewed those factors and you definitely qualify for a loan. In my opinion, it gives buyers confidence, you know, when shopping for a house, knowing that you're actually going to be able to, you know, obtain the house that you make an offer on and win on. I personally think the process with us collecting information and then providing you a ton of information arms a borrower with knowledge, expectations around payments, down payments, closing costs, everything. I think when you leave a pre-approval meeting, whether it's a Zoom meeting, phone call, in-person meeting, every single client should clearly be able to say, here's what my max pre-approval is, here's what my comfort zone is, right? There's a difference between the two. One is the most you can afford, the other one is where you probably should be. But I think you should also be able to kind of recite what your payments are and what goes into those payments. Things like property taxes, home insurance, condo fees, PMI, principal and interest. I think you should understand what kind of out-of-pocket expenses you're going to have in terms of closing costs and other prepaid items and attorney fees. You should know what your down payment options are going to be. There's lots of misconceptions around down payment. There's loan programs out there that allow for 3% down, 5% down, 10% down, and 20% or greater. You should be able to have an understanding of what kind of program and product is the best fit for you. And then you should have really clear expectations in terms of how to communicate with your loan officer during your house search. And all those things are very, very important. When I sit down with a first-time home buyer, in my opinion, you know, what I talk to them about, again, is gathering information. So I'm going to, you know, as a part of your credit, we're going to need to run your credit report and go through all the items on there, make sure everything's accurate, and dive through the type of expenses you have on there and what you can afford going forward. We're going to want to know about your income stability, whether you're paid if you're self-employed or if you have a base salary, if a part of your income is bonus, overtime, or commission, kind of stability of that. We're going to want to understand where your down payment's coming from. We're going to want to know, are you getting gift funds? Are you liquidating a 401k? Are you still saving for it? Do you have enough? Those are the type of things we're going to talk about. I think the three biggest things that I can help out a first-time homebuyer with, in my opinion, is making sure we budget accordingly from a monthly payment standpoint. So we're going to compare what the expenses are for your new future home and what you can afford, and make sure that that works for you, along with your current expenses. I always say it's really easy to fall in love with a house, but a lot of times you're going to be married to a monthly payment for the next 30 years or however long you live in it. We want to make sure we're setting clear expectations of what that is and what's going to go into it. We want to make sure you've accumulated enough for your down payment. That's the second part. Making sure that, sometimes, like I said, rent's expensive. Coming out of school with student loan debt, right? In a lot of cases. So sometimes the biggest barrier to entry that I see amongst first-time home buyers is accumulating enough for a down payment. Now, fortunately, there's a ton of great programs out there that allow for lower down payments. We're going to make sure you have enough for the down payment requirement for the price that you're looking in, as well as enough money for closing costs, escrows, prepaid items. And we're going to make sure you have enough left over, for whether it's reserve requirements for the lender or just for you personally, in terms of just making sure if there's an emergency or something comes up that you're covered. And then I'm going to really educate you in terms of how you can maximize your credit score. One of the biggest tips I can give somebody is the better your credit, the better your rates. Okay. So getting that credit score up over a 740 or a 760, anything you can do to get your credit score as high as possible is going to help you qualify for the best products out there, as well as the lowest interest rates. So I think that's really, really key and important. As a lender, we're going to guide you through the entire process, the application, picking your loan product, locking your interest rates, ordering appraisals, collecting all your documentation, and helping make sure you hit your mortgage application date, your commitment date, and getting ready for your closing date. We're going to help you, with all that stuff. And I think that's what a good lender does all the way through. But there's a lot of do's and don'ts throughout the course of the process. I would just say the biggest one that I can emphasize right now is absolutely get pre-approved as early as possible. If you think you're buying a house 6 months or a year out, you should be getting pre-approved now. And then in terms of credit, just really making sure that you get a credit report run early. Make sure there's no mistakes on there. It's common misconception that having your credit report is going to negatively impact your credit score with an inquiry on there. That's inaccurate. You can have your credit run, and you should be educated on what's on there. 1 out of every 4 credit reports has a mistake on there. I think it's really important to figure out things that you can do, very easy things that you can do, or things that you can challenge on your credit report that are going to maximize your score and in turn bring down your borrowing cost. And then making sure, there's a lot of clients that think their income is sufficient to qualify for a mortgage, and sometimes there's not. Lenders right now is a part of, we're in a very interesting time doing the seminar, right in the middle of this coronavirus pandemic that we're going through. Lenders are scrutinizing income and assets more than ever for stability and history and consistency. And so it's really important as a town lender to make sure that, your profile fits the needs of the certain programs out there, and that you can document it and we can prepare you for it. If you're prepared to meet with a lender, I always just kind of recommend having a certain set of documents aligned. What lenders are going to ask for are your 2 most recent years tax returns, 2 most recent years W-2s from your employers, 2 most recent pay stubs, and your most recent financial statements like investment accounts, bank accounts, retirement accounts. They want to see a total profile of your entire financial well-being. And then, be prepared to talk to them about whether you're going to be getting help from family. We see that amongst first-time home buyers a lot, that you're getting a gift from family. There's misconceptions it's not allowed. So that's a quick rundown on what's going on in the market right now and how we qualify somebody. But when you're leaving that meeting, you should not only have a pre-approval letter in hand, or more realistically in your email, and you should be armed with a ton of information. You should be prepared because things are happening fast. They're furious right now, and you should be armed with all that information on payments, down payments, closing costs, and how to act and how fast you can close and all those things. So obviously it's tough to cover in 10 minutes. I tried to do the best I could, but obviously if you guys have some questions, I'll definitely be happy to answer them either online here or via email, text, phone, or in person after.
And Shant, fabulous. As I said, so now what do we have? We've got a pre-approval from Shant. He's run through all of your numbers. He's looked at what you have. If there were any issues with your credit report, we straighten those away to maximize what your credit score is. And so now we have a kind of a ballpark that we can work in. It's important now to find someone who's going to be able to help you choose that home that's going to match your expectations. And keep in mind that there are many different things that are going to go into that purchase, which is why I'm going to turn it over to Paul now, because Paul is an expert in matching the real property, the home, with the desire that you have. And again, and I don't want to say that Paul's going to be able to get you that $4 million mansion for $100,000. He's good, he's not God. So there does have to be kind of a realistic thing that we're working in here, but this is the reason why you go to someone like him to help you choose what you're going to buy and to help you in that negotiating process. The one thing I want to say before I turn it over to Paul is that you are emotionally involved in the purchase. And that emotion is going to color the way you think about things. Paul cares about you, cares about what you're going to do, but he's not emotionally involved. He's intellectually involved. And that difference is critical. That's why you need Paul, because he's going to be level-headed. And many of you I know are smart people, educated people, people who say, well, I can do this on my own. Ask yourself this: would you do your own root canal? I mean, I'm sure you can go and get a YouTube video to show you that, but I'm not sure that you're going to try that. This is more important than that root canal. Paul, go ahead.
Yes, thank you, David. As working with first-time home buyers or people selling or buying once again, like you said, it's important to get a realtor that knows the market and can understand the trends. With this COVID epidemic, it's definitely changed the trends within a matter of a month or 2 months, and it was nothing on the market, no activity. Now it's a lot of activity, and people don't know what to do, and they get multiple offers as a first-time home buyer, and they're frustrated. So I have a fiduciary responsibility to my clients as a buyer to make sure that they are financially sound and know what the budget is and are not going to be house poor, basically. So with my market reports and trends, and knowing their budget, I can set them up on an MLS search that is very, very specific to their criteria. So if they want a condo, single family, multifamily, duplex with a garage, 3 bedrooms, 2 baths, I can set it up specifically to their needs. And like you said, people right now are moving out with the rates are so low. You can still find value, but you have to expand. I'm working with a client. He's looking at a specific area that his budget is $485. He got pre-approved for $485. So I'm like, I know he stretched himself. I'm like, what is your comfortable position? He's like $400 to $450. I'm like, okay. I'm like, what are your needs? He's like, I need 3 bedrooms, a garage, lots of land. I'm like, we're looking in areas where rental report, looking in areas that he wants to be, everything's going for $550. A year ago, he probably could have bought for $475 or for $450. But right now, with everything going on, and the rates, the value of the property is increased. So I suggested him other towns when I ran the numbers that have his property, and we're looking at those areas where it's probably a little bit lower, same distance to where he wants to be in jobs, and it has the same amenities and everything. So it's basically with the first time home buyers, It's knowing what you want, knowing what you don't want, viewing as a real higher realtor that can listen to you, understand what your needs are, and understand the current market trends, because it varies from different towns and different cities and different zip codes. It's a two-step process in Massachusetts. You get the offer and you get the purchase and sale agreement. So once you find a house you like, we'll go over the numbers. I'll do a market analysis to find out what's the best price for the negotiation. Usually I take a look at the days on market, if there's been any price reductions, and what's sold in the area. So that allows me to get a general knowledge of what to put in for an offer. Usually, when I write up an offer, the initial deposit is $1,000, and then once your offer gets accepted, you have 10 days for a home inspection. Walk you through the home inspection. The home inspection will check out it's usually 2 hours. It checks out your electrical, the plumbing, heating, cooling, appliances, windows, roofs, whatever they can see, and they'll give you a report. So if the report's fine and everything's pretty much safe, then you move to the next step, where I'll be in contact with David. He'll have the offer. The seller's attorney will have the offer. They'll be writing up a purchase and sale. So within 10 business days, a purchase and sale is drafted and agreed upon, and your deposit, which is 5% of the remainder, is to be held in escrow. So once the P&S is signed and executed, and the deposits are given to the seller's attorney or the seller's brokerage or they're holding in escrow, P&S is given to Shant. That's where Shant does his work, running all the numbers, and then I would say within 10 days, Shant, that you schedule appraisal.
Yep.
Appraiser. So that comes out. Once the appraiser comes, it's pretty much smooth sailing after that. So with another 15 days, Shant will give us a clear to close, and then that way David will come in and close it for the buyer. But it's no transaction is typical, because you have condos, you have single families, you have multifamilies. They all have different variations and different aspects that you want to focus on. Condos, you want to know about any special assessments. Condo associations, are the reserves strong? Multifamilies, are there any leases you're going to be dealing with? Are tenant and wills? Are the utilities separate, or is it on the owner? That's pretty much it. A typical closing from start to finish is 30 days, unless something happens and you can have an extension. If it's home inspection, something happened in home inspection, you can do a contingency. Or if it's a mortgage, you need some more documents, then there's usually a couple of grace period, agree to bond both parties to have extension for the mortgage as well.
So now what's going to happen is Paul has mentioned a couple things. One, he mentioned the offer, which is a legal document. Most people think that if they sign the offer and in that document, it'll talk about a purchase and sales agreement, that they can simply back out of the deal if they want to, with only signing the offer. There is what people think, and then there is what is actually the law. The law is that offer is a binding contract between the buyer and the seller, subject to whatever contingencies are in there, one of which is the home inspection. So if the home inspection clause says, if you do the home inspection and you find greater than $500 of issue, then you have the opportunity to walk away and receive your deposit back. There is not an obligation on the part of the seller to renegotiate the price if they don't want to. Now, most of the time, if you've offered a reasonable amount of money and you find some issue and you're saying, I'm walking away, that will prompt a seller, assuming your request is reasonable, to go, well, wait a minute, where are you going? What can we do? And that's something that I want to talk about really briefly before I get into the PMS. In your home inspection, think about what you're inspecting. If you're inspecting a home that is 50 years old, it's a 50-year-old home. That means the heating system is not going to be brand new. The roof may not be brand new. There may be some settlement cracks, different things like that. That does not mean that the house is not good. That simply means it's not a brand new home. If you want a brand new home, then buy a brand new home. Now, just FYI, brand new homes have their own unique issues because the house is brand new. So none of the systems are tested. Yes, they are new, but new things do break as well. So what I'm saying to you is, if the roof is inspected and the inspector says, well, that roof is 15 years old, in 5 or 10 years, you're probably going to have to replace it, it's unlikely, if that roof is not actively leaking, notice what I said, actively leaking, that the seller is going to just simply strip the whole roof off and put a brand new one on, because that's going to cost $10,000 or $15,000. If he or she was going to do that, they would up the price $10,000 or $15,000 to cover the cost of the roof. So keep in your head that when you do the inspection, think about, are these things that are critical system things, like, is the roof leaking? In which case, Paul certainly is going to notice that. He's going to help you negotiate with how do we deal with that. Is the heat not functioning? Again, if things are not working, it's much easier to get them fixed either by the seller or potentially a closing cost credit towards repairing those things, or any number of things. And that's something that Paul's going to help you negotiate and help you get a sense of what the value should be. Now, anything that is in the legal document, which is the offer, anything that you put in there automatically goes into the purchase and sales agreement. So if Shant has worked out something with you that you are getting an FHA loan of 30 years, and this is the only loan product that will fit whatever your unique system is or criteria is, that needs to go into the financing contingency that you will be applying for, an FHA loan of whatever the criteria is. And the reason for that is because we want to make it so that if that loan gets denied, God forbid, you are able then to get back all of your deposit that you put down. Now, many of you have heard of something called the standard form purchase and sales agreement. In the Boston area, we use the Greater Boston Real Estate Form. That form is 4 pages long, approximately. If memory serves, the last revision was 2005, I think. I've been practicing real estate law for over 30 years. I stopped really counting at a certain point. And I will tell you that that purchase and sales agreement is just a base. That agreement is not the final agreement that we use. My purchase and sales agreement is based off of that, and that's 4 pages, mine is 10. Now you might say, well, Dave, why are there 6 more pages to yours? And does that cost me more money? Well, A, there's 6 more pages because Every time my bum almost got shot off in a transaction, I said, that will never happen again. And I wrote a paragraph that explained the ambiguity that is causing the problem between the buyer and the seller. So those 6 pages are things that clarify things for people so that everybody understands what's their obligation and what's going to happen. In terms of, is it going to cost you more money? The answer is no. Not for me, it's not. I bill generally at $300 an hour for other legal work. When I do real estate work, if I am the closing attorney, say working with Shant or somebody, normal P&S for a cash deal is going to be about $700. I'm not going to charge you at all to do the P&S work. That's going to be completely free. The other thing I'm going to try to do for me, and I'm trying to answer a question here about somebody with closing costs. You see, when you borrow money from a lender, some lenders have closing costs that are simply ways of making additional money. I happen to know guaranteed rate because I've done work with guaranteed rate for many years. They don't have what we, in my end of things, call baloney fees, which are fees that add in $100, $200. It says to lender, but they're not for anything. Yes, they're for document preparation, but that's done by computer. They're ways of making extra money. I am blessed that I don't work for anyone. I have my own firm, so I don't work for lenders that don't do things that rise to a certain moral level. Guaranteed rate, and Shant in particular, is somebody who does good, honest work. Their rates are competitive, their rates are good. If you go on the internet and chase the rate, you are going to be getting a lender from an area that doesn't work in Massachusetts, and we are a special people. We seem to have more unusual rules than anybody else. Shant, Paul are going to know those rules, but if you go to you go to Quicken Loans out of Idaho, you know, they're going to be asking for things and doing things that we don't do. And that's going to affect you and make it harder. Now, as Paul said, with that purchase and sales agreement, what's my objective? My objective is to legally take you from the beginning of the legal process all the way to the end, so that when this transaction is done, you get this home and are protected. My personal philosophy is always that I make a fair agreement. It's not buyer weighted, it's not seller weighted. I've done enough of this over the years, thousands of closings, more. I don't like doing this. I don't like starting here, seller is here, and then we incrementally go like this over 5 days to the middle. I don't have any time for that nonsense. I just go to the middle. I already know everything the seller is going to want. I already know everything the buyer is going to want. So I just put all those in the agreement and finish. So that way it's done. You're protected. The seller's protected. Everyone knows what they want, which is why it's your obligation to tell me, what do you want? What are your expectations? What did the seller promise you? Because buying a home is a wonderful, wonderful thing. At the end of this process, if you think I haven't done anything and Shant hasn't done anything and Paul hasn't done anything because everything has been so smooth that the thing has just moved along seamlessly, that means we did it perfectly. Because if we are each doing our job perfectly, you put that offer in, it gets accepted, I do the documentation that's necessary, and off we go to Shant, and then he does what he's got to do, and eventually we're going to get to that closing where you get to buy the property, okay? Once that P&S is done, just so you know, I'm going to go over it with you. I'll email it to you. You have to read it, And for those of you who are Bentley students and former Bentley students of mine, you need to do your homework, which means if I send you something, take an hour and read the damn thing. Why? So that when I go over it with you, you'll understand. I'm not going to get upset with you if you don't understand things because it's not your line of work. You're not a lawyer. In the same way, Shant will explain the lending process to you and things that you don't know. So ask all the questions you want, okay? But once you understand that and it's all worked out, I'm going to shoot it back to Paul and I'm going to say, Paul, schedule them to sign this document. They understand what it says. Paul may be using DocuSign or an electronic methodology to sign it. He may be using where he's going to bring it to you. That's kind of up to him, okay? The only other thing I want to say before I switch it back to Shant in terms of your commitment and to closing is that keep in mind that when you submit documents to Shant, do me a favor, keep a thumb drive of all the documents you sent, just in case something gets lost, they think you didn't send it, something happened. So that if somebody says to you, oh, I need that W-2 again, you'll be able to send it right away instead of having to search for it, etc. Okay? Also, it's easier for us from a legal perspective. Now, today's the 13th, okay? If your loan commitment is due on Monday, today being Thursday, okay, it's much easier for us to start asking and making sure it's going to come now than wait until Monday at 4 o'clock in the afternoon and, you know, call the seller and call Shant and call Paul to try to get an extension, okay? We optimally want to do things ahead of time. We can always move things forward. It's sometimes, depending on sellers, to move things out because people are expecting, I need to know by this day what you're going to do. Are you going to buy this house or not? So that I can do what I'm going to do. Okay. So let me turn it back to Shant to talk about commitment and closing and that kind of thing. And then I'm going to just go back to you about the closing itself. Go ahead, Paul. Shant, rather.
Absolutely. Thank you. That was great. And a lot of really great information by both you guys. You know, let's just say your offer is accepted. So the minute your offer is accepted, don't forget to let the lender know, right? You know, it's super, super important that we're looped into the process. Like Paul was saying, a lot of these closings are happening super fast. And, you know, obviously the closing date's very, very important. But as David was saying, to me, the most important thing is working towards that commitment date. Because when that commitment date hits, what a commitment is it's essentially the bank's promise to you as a buyer that we're committed to lending you the money that you need to, you know, go to closing. So if you're buying a house for $500,000 and you're putting down, let's just say 100,000 example, 20%, and you're going to borrow $4, we're saying we're on the hook. We're committed to you to give you that $400,000. Now, how we get there, you know, there's 4 major steps in terms of getting to a commitment. 1, we send you out the formal loan application. Now, you know, we've been doing this for a long time, but more so now than ever, we're very rarely ever meeting with people in person, right? We're doing business all around the country. And, you know, whether it's Zoom calls, other, you know, type of methods, but mostly Zoom, email, phone, we can get it done. You're going to get your loan application generally via DocuSign, okay? It's going to be completely prepared and filled out based on the information you've already provided to us, okay? That's step 1. Next, you know, if you've been pre-approved already, we've got a baseline of documentation on you, but let's just say you haven't. We're going to need your tax returns, your W-2s, your pay stubs, your bank statements, your offer letter, your purchase and sales agreement. You're going to need to get proof of homeowner's insurance for the house that you're buying. And we're going to verify where your assets came from. Did you get any gift money? Did you liquidate any funds from somewhere else? We paper trail every penny of the cash utilized for the down payment, okay? And, you know, we're going to ask you for some stuff. We really, as a lender from a compliance standpoint and from what our job is, we got to really dive in and look at everything. So we're going to ask you for stuff. So make sure you've got everything ready and easily accessible, okay? We're also going to order a home appraisal. So we're going to send an appraiser out to the property. They're an independent third party that is to evaluate the property to make sure it's worth what you're paying for it. Protects us, but it also protects you as a home buyer, okay? And then we're going to work with David and we're going to order a title, and they're going to review the title to make sure the lien that we're putting on this house and this property that you're buying. When you buy property, a lot of times you just think of the physical property, but what you're really buying is a piece of paper, right? You're buying the deed to the property, right? You got to make sure that as much as like you do a home inspection on their property to make sure that you know what you're buying, he's doing an inspection on the title, right? To make sure that there's no liens or encumbrances or any surprise you're going to have once you take ownership of it, or even when you go to sell it, right? So that's what he's doing. So and for us, we're going to put a lien on this property, so we want to make sure the title's a clean title. So we collect the title work, we collect the appraisal, we collect your documents in your appraisal, we underwrite your file, and an underwriter is a separate party from me because a loan officer is somebody that generates business for the company. I understand my guidelines. I'm a professional. I work within those guidelines. We have a third-party company third party separate from the sales function of our organization that signs off on all those guidelines. That's when your commitment letter is issued. That commitment letter is just, has all the terms of your loan, the rate, the loan amount, the payment, and anything else we need to do from a condition standpoint between the time that commitment letter is issued and closing. Now, you're expected, once you have that commitment letter, between that time and closing, you're expected to kind of maintain your qualification. So definitely don't quit your job after you've got a commitment letter in between closing. Not a good idea. Don't miss payments. Don't spend any of the money that we're counting on in terms of the down payment of the reserves, because we're going to verify that stuff before closing, or it could come up and it could cause a problem, right? Right before closing, we're going to send you 3 days prior to closing. We're required to send you what's called a closing disclosure. It's a compliant document that just makes sure you outline your terms one more time. You have to sign that. And then usually within 1, 2, or 3 days before closing, we send the closing package out to the closing attorney so they have time to review it and prepare it for you. And then we fund the loan the day of closing. Now, as a lender, our goal is to stay in touch with you for the rest of your life. If you buy homes, second homes, new primary residence, all that stuff. So we'll follow up with you generally every 6 months or a year, every 6 months or throughout the course of the year, just to let you know what's going on with the market. We're having a lot of success refinancing people right now. All our previous clients are pretty much eligible to refinance. So we're calling them and letting them know, is your mortgage the best mortgage that's still available? We look at those type of things. But, there's a lot of value a really good loan officer does. I think the one piece of advice that I'd give is that before you make an offer, after you've been pre-approved, make sure you call your loan officer and say, hey, I'm thinking about making this offer. There's going to be, it's hot property, right? What are my payments specific to this property? What are my down payment options? What are my closing costs? It's very important that you're armed with that information, that you don't find that out after you have an offer accepted. Like I said, a lot of bidding wars happening in the market right now. It's very competitive, and a lot of people, if you're not armed with that information, you're not prepared, you're not confident, you're not knowledgeable, you're going to get overwhelmed by the process. You get stressed out, you're going to remove yourself from the game. When you're confident, knowledgeable, prepared, have that information, you know how to act, you can make important decisions, and then you're more likely to win, right? And even though things are getting bid up, I personally wouldn't get overwhelmed by that, only because that's been happening in this market for 6, 7, or 8 years. You ask your friends, your clients, your family members that bought a house 5, 6, 7, 10 years ago, 20 years ago, if they overpaid for a house, just because you pay a little bit more than what it's worth at the time, what it's on the market for, it doesn't necessarily mean you overpaid. Because over the course of time, real estate, like David said at the very beginning, does very, very well. And I think it's important to get into the market no matter what your budget is, and it allows you to kind of start building that equity over the course of time.
And what I'm going to do now, I'm going to describe the closing process, but before I do that, I just want to turn it over to Paul, because on the day of the closing, you're going to be doing something called a walkthrough. And Paul, could you describe the walkthrough for everybody?
Well, walkthrough is scheduled the day of the closing to make sure the house and property is still there and in the same condition that we agreed upon, and is broom swept clean. And once it'll take like 5 or 15 minutes to walk through the house. If there's any issues like debris, we'll reach out to the seller. I'll reach out to the seller's agent to make sure that that's taken care of. And then we'll go see you, David, where I would have the keys, and they'll sign all the documents that they need. Yeah, it's pretty much the walkthrough is pretty much it.
Okay, so.
And you probably want to, after the closing, is to make sure within 10 business days to change your utilities into your name.
So what's that walkthrough? The walkthrough is your opportunity to make sure that everything is working. Now, I cannot stress this enough. Take the time to make sure everything is working. If the heat is there, turn the heat on. Make sure it's working. Make sure the washing machine's working, the lights are working, all these kinds of things. Why? Because after we sign the documents at the closing, and again, I'm going to talk about that in a second, once that goes on record and you're true owner, if you go back to that house and suddenly the washing machine isn't working and you go, what the hell? Well, you know what? That's on you. But if you had found out about that before the closing happened, Paul and myself would be negotiating on your behalf to say to the seller, well, the washing machine was working when we bought it, the dishwasher was working when we did our home inspection, and now it's not. So that's something you've got to fix. In my own circumstance, when I bought my own house, the day before the closing, the heat failed. It was in November, and it cost $500 to fix. Now, had I not checked that $500 would have been coming out of me. Now, the seller was not happy about that. I'm not saying he was having a little dance, but nonetheless, that's their responsibility. Now, Shant mentioned that the bank is going to prepare all the paperwork. They do right now the bulk of it. I do some of it. It's going to get sent to me. For those of you who are type A1 personalities, that you like to look at things ahead of time, a week ahead, guess what? You're going to be disappointed. That is not happening, okay? No, I'm not going to be able to get you all the documents 4 days ahead of time, so don't ask me, all right? Shant's team and any lender is going to do the best they can. It's not like they're sitting on your documents going, haha, let's see if we can aggravate these people. They're trying to process as many loans as they can. But the likelihood is that most of the time, I will have to tell you, 90% of the time, my documents show up 8 or 9 o'clock the morning before the closing. If I'm lucky, they show up the day before. And there are things that I'm going to do, and then I'm going to say to you, I need you to wire to me this amount of money. Notice I said the word wire. I didn't say the word bank check. You know why? Because we don't use bank checks in Massachusetts anymore because it's against the law, okay? Well, I haven't heard that, David. I know lawyers that do this. Okay, well, if you'd like, you can certainly tell me who they are and I'll notify the Board of Bar Overseers and they'll get pissed off. But the truth of the matter is, bank checks are not considered good funds in Massachusetts, which means, in short, they're not equivalent to cash, okay? So you have to wire the funds to me or to whatever closing attorney it is. Now, if that closing attorney sends you a form, do not accept information about that wire from anyone via text or email. Confirm all those instructions with the closing attorney himself or herself personally. Go over all the numbers, ABA routing number, account number, so that you can make certain that that money that you send in is going to actually get to their account. A scam that's going on right now, and I'm not really certain how they accomplish it, but we many times ask people to wire things and then they'll get a text from somebody pretending to be from Missirian Law Offices saying, oh, we're going to use a different account, send it here. And I had a client that unfortunately did do that. He sent $150,000 to the wrong place. Luckily, we were able to catch that money in time and he didn't lose the money. But the point being that only take instructions from myself or your closing lawyer directly. Now, the closing procedure will take about half hour to an hour of time, depending on how many questions you have. For the most part, 98% of all the documentation, which spans about 100 pages, is going to be standardized, meaning the same promissory note is a Fannie Mae note, mortgage is a Fannie Mae Freddie Mac note, mortgage rather. So the documents are going to be fairly standardized. I'm going to go over them, each document in a general way, telling you the high points. The most important document out of them all, in my opinion, is the promissory note. So you want to make sure you're borrowing the right amount of money, they have the interest rate correct, and they have the years of the loan correct. If that is correct, 90% of the documents are going to be fine because it's going to flow out of that. Make sure your names are spelled correctly, your middle initial is correct, etc. Okay? And as I said, once we go through all those documents, I verified that you are who you are, so make sure you bring your driver's license, make sure it's not expired, please, some other secondary form of identification, and then we sign all that. Paul's gonna give you the keys, depending on if the seller will agree to that or not. Some sellers don't like to give the keys until we're on record. I will tell you, closing at the Registry of Deeds doesn't speed anything up. And the reason it doesn't is I'm not allowed to go to record, meaning take the mortgage and the deed to the registry and record it until Guaranteed Rate sends me the money by wire into my account. Sometimes that happens, right away in the morning, 10 o'clock. Sometimes it might get delayed for some reason and not show up, till 1 o'clock. Try to schedule your closings earlier in the day, okay? The registry closes at 4. And if you're buying in Middlesex County, they stop taking anything, and then not taking anything, physically anymore. We have to do it electronically at 3:30. So I like to have our closing scheduled at around 10 o'clock in the morning. That gives Paul time to take you on a nice walkthrough in the morning. It gives the lender a chance to send over any last minute documents. And then our closing gets done by about 11. And then, my money shows up and then I fire it onto the registry. And then you're notified at about 1 o'clock or 2 o'clock that we are on record and you're true owner, okay? Again, where can we close? I have the luxury of being able to close wherever I want. So generally, I might close at Paul's office if he's convenient and available. I might do it in your home. And I say this as an option. My wife would probably tell me not to say this, but let's assume hypothetically that you say, well, Dave, I've got a meeting that morning and I have to leave my house at 6 a.m. Well, you know what that means? That means I'm going to be at your house at 5 a.m. and I'm going to be closing that loan in your living room. And that's okay with me, all right? My job is to make this a comfortable, wonderful experience for you. And what I want you to think about is this. Find that house that makes you happy. Now, yes, would I love you to have a 5-bedroom colonial that just got completely rehabbed that's worth $1 million and they're selling it because they like your face for $400,000? Sure, I would. Understand, if it's your first house, this may be the first of many. It also, like me, the house I'm in right now, and that background is actually Dr. Strange. That's not my house. I wish it was. The house that I bought 30 years ago is the house that we're still in. So I'm the exception, not the rule necessarily. But one thing I can tell you, buying a home is a wonderful thing, because when you're done, you're going to go out on a weekend morning and you're going to look at that house with your coffee in your hand or your tea in your hand, and you're going to say, yeah, see that broken board? That's mine. That's my broken board. See that porch over there? That's my porch. Nobody else's porch. If you want to pay rent to somebody else, that's a lovely thing. You're a generous person. You're helping that person pay off their mortgage. That's a nice thing to do. But maybe it's nicer for you to own your own home. Start your own dream. And Paul and Shant are people that can help you to do that. So can I, okay? I will tell you this right now, and now I'm gonna kind of finish up. For me, I'm gonna give you my cell phone over this thing here. My cell is 617-429-8855. Feel free to call me, text me anytime you want with a question. It's not a problem. I'm more than happy to answer the question for you. If I can't answer it, if it's a Shant question, I'll reach out to Shant, or I'll refer you over to him or to Paul to answer the question. Our job is to make your life easier. My hope is that when you buy this house, you will be ecstatic, and that it'll be the beginning of a wonderful thing. Is it scary? Yeah, your first was a little scary. I have to say. My first one, I couldn't even fathom how the hell I was going to pay for it, my wife and myself. But I will tell you right now, it's the most wonderful thing you can do. So, or one of, I think. Okay, that's all I've got right now. Paul or Shant, do you have anything else to say? Or Emily?
I'm good. I thought this was great. A lot of good information out there.
There's lots of questions that were submitted. I just wanted to say really quickly, as Dave gave his cell phone information, I'm sure that you can also reach out to Paul and Shant. Correct me if I'm wrong, Paul.
Yes, you can find me on Instagram, Paul Reed, R-E-E-D, Boston, and also on Facebook, Paul Reed, Boston, and LinkedIn.
Cool. You can email me directly at shant@rate.com. That's SHANT@rate.com. And my cell phone is also, you can reach me anytime, 617-827-6674. There's not a lot of Shants out there that are in the mortgage business. So you can, if you Google me, a pretty easy person to find.
And we'll include all this information in the follow-up. I'm sorry, Paul, go ahead.
And my cell phone number is 617-352-4016. Call or text.
If you're in Massachusetts, we'll make sure you guys can get in touch with our panelists today. And I know there's lots of questions, but it really is such a specific experience for you as an individual or for anyone who is purchasing together, as whether a couple or family. So you'll probably want to reach out to them with your specific questions, especially because every market is a little different outside of Massachusetts.
Hey, Emily, one thing I would add is I'm licensed in almost virtually the entire country now, except Utah. So if there's any Bentley alumni in Utah, sorry, I can't help you out, but almost everywhere else I can help. I'd love the opportunity to. So if you're buying outside of Massachusetts, definitely still hit me up.
That explains why your volume is so large.
Yes.
I can help as well, Emily, in any other states or any other country with Coldwell Banker's branch. So we have agents all around the world.
Well, I apologize. I misspoke then.
That's all right.
Feel free to reach out to these guys. All right. Well, thank you everyone so much. I'm sorry we weren't able to get to all the questions, but hopefully you got this information that you wanted or were looking for to get started. And we'll definitely send around the recording afterwards along with all the contact information. So thank you very much and have a great day.
Have a great day, everybody.
Take care.